Today's class, I'm going to be doing a pure price action breakdown of GBPUSD. How we go on from reading the market from the biggest time frame available to us to going to small time frames like the 30 minutes time frame or the 1 hour time frame to look for a trade entry opportunity. Okay, so it's always important, like I say, that what for every single trade you should start from the monthly time frame. It's very important. Start from the monthly time frame on every single trade, then take it down from the monthly down to small time frames like the 30 minutes or the 1 hour to look for a trade entry opportunity. Okay, so what is the first thing we do on the charts? Okay, clearly we can see prices bearish here. Okay, by just using our naked eye to see prices, we can see prices clearly bearish. Okay, so what are we going to do? We're going to identify the structures. Okay, and clearly I can see price make push, exhaustion, push, exhaustion, and push. So clearly, without any doubt, prices is on bearish structures. This lets me know that what if we pick what a buy entry opportunity at this point, the maximum we can buy to is the 61.8. Okay, we're going to bring our Fibonacci from the high here to the high here. The maximum we can buy to is the 61.8 because that would be what trading against the natural flow of the market, and price could keep going down to continue its structures of lower highs and lower lows. So the maximum we can buy to is to the 61.8. Okay, so we'll bring our Fibonacci out from the top to the bottom to identify the 61.8. Okay, so clearly here the 61.8 has been identified. Okay, this means that what the 61.8 is a key reversal area, and there's a probability that what if we see a break, there's a probability that what this key reversal area can send prices back down to this level. Okay, so our own job now is to what is to read the bullish structures, okay, and see if there's been a break of the bullish structure. Okay, if there's been a break of the bullish structure, clearly we know that what we are selling to what 100.0 off the broken fractal. Okay, for those that just joined right now, you are welcome. What I was just trying to say was as usual, the first thing we do, okay, you will see that this thing repeats in all of my trade, in every of my analysis. Okay, I've had students tell me that I'm being very consistent with how I teach and with how I trade. It's almost like I repeat the same thing every time. Okay, this is how it is supposed to be. I'm not supposed to teach you, something today and tomorrow I teach you something else. Okay, that will be incorrect. Okay, the same way I trade in January is the same way I'm going to trade in December. Okay, so like I said, what do? I would go to the biggest time frame available to us in the market. That's the first thing I do, and identify the overall structure. Okay, on GBPUSD, clearly I can see this is a push, this is an exhaustion, this is a push, this is an exhaustion overall, and this is a push. Okay, clear bearish structures of lower highs and lower lows. So any buy opportunity here, the maximum I can buy to is the 61.8. I'll bring my Fibonacci from the high here to the low here to the 61.8, and at 61.8, I know that what if I see a break of the bullish structure, I'm going to sell down to the 100.0 of the broken fractal, till I eventually sell to the overall 100.0, because at the end of the day, prices could keep continuing on lower highs and lower lows coordination. Okay, so I'll bring my Fibonacci from the high to the low right here. Okay, so my Fibonacci from the high to the low, one thing I can see clearly is that what prices is trading around the 61.8. And remember that what 61.8 is the key reversal area. So my job is to go down time frames and see if there's been a break of the bullish structure. If there's been a break of the bullish structure, I'm going to sell to what the 100.0 of the broken fractal. Whatever fractal is broken, I'm going to sell to the 100.0 till I eventually come to the overall 100.0 if the old bullish structure breaks. Okay, so now that takes me now to my weekly time frame. Okay, so on the weekly time frame, what do I do on the weekly time frame? I identify the bullish structure. I can see price clearly make a push, exhaustion, push, exhaustion, push, break of structure. Okay, so clearly we've seen a break of structure. So the question is what? There's been a break of structure. What fractal was broken? Okay, if you've seen all of my videos and you've joined my classes, you know that like I always say when it comes to fractals, that you can go from small to big fractals. You can merge them together, small to big fractals. Sorry, just a moment, sorry. Okay, so small to big fractals can be merged, while what big to small fractals has to be separated. You have to separate big to small fractals while you can merge small to big fractals. Okay, so this means that if prices goes from a big to a small fractal and there's a break of the small fractal, the break of the small fractal does not affect the big fractal. Okay, so in this case now, we saw a break of the fractal here. Where the break of the fractal happened here, it's the break of a small fractal. Okay, because if we bring our remember, fractals are measured by the length of their exhaustion. If we bring our crosshair tool from the high here to the low, this is what? 358 pips. 358 pips. Let me put that in small writing. 358 pips. Also here, if we bring our crosshair tool from the high here, from the highest point right here to the low point right here, this is 650 pips. 650 pips. Okay, so at the end of the day, this is what? This is push, exhaustion. 650 pips fractal is separate. Clearly, without any doubt, it has not been broken. Okay, and this is push, exhaustion, push, break of structure. Okay, so clearly this is the structure that has been broken, and eventually price is coming to what? To the 100.0 of the broken fractal, because we are fractal traders and we trade within the context of the fractal opportunity that prices gives us. So eventually, so we are coming to 100.0 of the broken fractal right here. Okay, so now clearly there's been a break of structure. So now that there's been a break of structure, what are we expecting? We're expecting prices to make a natural 61-point retracement. It doesn't do it all the time. Like someone asked me yesterday, how do I know price will give a natural 61-point retracement? I don't know, except what I see a break of the bearish structure. And if I see a break of the bearish structure, I sell to what? The 61 point of the broken fractal. Okay, so in this case now there's been a break of structure. So we know that what? Eventually price is coming here. Okay, because what? We have three variations of entry of a trade. We have what? Push, exhaustion, push, break of structure. You can sell here, put your stop loss here. Entry variation 1, that is sell here, put your stop loss here to TP here. Okay, in the direction of trend. But that would not give us a good risk reward. Okay, we have entry variation 2, which is what? 61-point retracement. Sell pinpoint at 61.8, put your stop loss at the high, and sell to this ground level. That's entry variation 2. Sell pinpoint at 61.8, put your stop loss at the high, entry variation 2. And entry variation 3 is what? Go to smaller time frames and read the fractals that took prices up. At the break of the structure, you can sell, put your stop loss at the high, then sell to the ground level at this point. Okay, at the break of the structure. So now, because this is a weekly time frame, like I said, our tradable area is between this low right here to this high. This is the structure that has been broken from what? From push, exhaustion, push, break of structure. Okay, so eventually price is coming to the ground level like we talked about. But now we see prices go for a natural 61-point retracement. Okay, we can actually sell here with our stop loss here and sell to the ground level here and just leave it. But this is a weekly time frame. The stop loss is going to be too wide. And because of the stop loss that is too wide, the risk reward is not going to make sense. So instead of doing that, what are we going to do? We are going to use what? Our third entry variation, which is what? Break of structure. Go to smaller time frames and read the structure that took prices up and look for a break of structure. Sell with your stop loss at the high. So on this trade, we're going to use what? The third entry variation, just like I mentioned. So we'll go down time frames to the daily time frame to read what price is currently doing again before going to the 4-hour time frame to read the structures. Okay, so overall, like we said, this is what? Push, exhaustion, push, clear break of structure happened at this point. TP is here. Prices went for a natural 61-point retracement. So we are going to go towards to the small time frames like the 4 hours and to read the bullish structures that took price to 61.8 and look for what? A break of the bullish structure. Okay, so bring our Fibonacci out from the high to the low here just to be able to identify the 61.8. All of these levels here at the 61 point. Like I always say, 61 point is a zone. 61 point is not just a pinpoint level, because I've had students say, okay, prices broke 61 point and stuff like that, but it's a zone. Okay, so since it's a retracing market, we know clearly that what the maximum allowed for us in a retracing market is the 61.8. Okay, so now we've identified our 61.8. So we'll go to the 4-hour time frame. So on the 4-hour time frame now, we can see prices make structures, you know, from the beginning, like we said, of push, exhaustion, overall, push, exhaustion, push, exhaustion, push, exhaustion, push. Then we saw a break of structure happen at this point. The last higher low was broken at this point. So as usual, we said that what are we going to do? Our job is to find out that what fractal was broken. We've seen all of the bullish structure that took prices to our key reversal area at 61.8, and we've seen a clear break of structure. So our question is, what fractal was broken? Okay, so we now went and we measured it from the ground. Okay, we measured it from the ground here. This was 270 pips. We'll write it down. 270 pips. From here, from the high to the low point here, this 242 pips. We'll write that down. 242 pips. It's a smaller fractal in comparison to the one before it. Then we'll take it from the high here to the low here. This is what 130 pips. 130 pips. Then the next one from the high here to the low here. This is what 235 pips. 235 pips. Then the structure that was broken is the structure of the high here to the low here. This is what 181 pips. 181 pips. Okay, like I just thought that a break of a small fractal does not affect a big fractal. Okay, this means that price makes push, exhaustion, something like that, and we see prices make smaller fractals like this, and we see a break of the smaller fractal. At maximum, the TP is at this level. Okay, it has not broken this level to come here. Okay, so the maximum is this level for take profits. Okay, because the fractal that was broken is smaller. So a break of a small fractal does not affect in any way the big fractal. Okay, so we saw prices make push, exhaustion. This is the fractal at 270. It's the biggest right here. It has no business with them. This was 242. 242 is also bigger than all the ones in front. It has no business with them. Then the next one is 130. Then the next one is 235. Because I merged them together because you can go from small to big fractals. Okay, so now 235 will separate it because the fractal that was broken is the fractal of 181. Okay, so the fractal at 181 is the one that has been broken. Okay, so we are now going to go and focus on the fractal that was broken, because we know that now that there's been a break of the fractal, price will come to the 100.0 of the broken fractal. At 100.0, if it breaks, then it has broken the structure at 225 and the one that are lower below it, which is 130. This means it will send prices here. Okay, a break of the structure at 225 does not affect the structure at 242 because 235 is lower in terms of the pips. Okay, so prices has to break the structure at 242 to affect the structure at 242 to send prices here, and price has to break the structure at 270 to eventually send prices to the ground level. Okay, so clearly we've seen that the break of structure is the structure at 181. That means that this is push, exhaustion. Okay, we have to separate that out. Okay, then this is push, clear break of structure right here. Okay, so
Mr. Damid, the network was cutting out earlier, so we missed a few things there.
Okay, what about now?
We're going through the. Now it's fine.
Okay. Okay, so what I was trying to say is the fractal that was broken is the fractal of 181. That is push, exhaustion. This is the last higher low, right? Then price made push, break of structure. So the fractal that was broken is the fractal at 181 pips. Okay, so a break of the fractal at 181 pips ends here, because the fractal below here is a fractal of 235 pips, which is far bigger. And just like we said, that a break of the small fractal does not affect the big fractal. Okay, so eventually price is coming here. Okay, so direction of trend, we know that we are selling to the 100.0. Okay, but now after the break of structure happened, we know that prices would go for a natural 61.8 retracement. Okay, so clearly the break of structure has happened. We have three variations of entry, like I always say: push, exhaustion, push, break of structure, sell, stop loss at high. That's entry 1. Entry 2 is break of structure. Now at 61.8, sell pinpoint, put your stop loss here to the ground level, Or the third way is what? Go to small time frames and read the structures that took prices to 61.8 and sell at the break of it with your stop loss at the high and sell to the ground level. Okay, so these are our different variations of entry. Okay, so now that there's been a break of structure, what do? You sell, put your stop loss at the high and you sell to the ground level here for entry variation 1. Okay, but it is not going to give us a good risk reward. So instead, we know that what if we sell pinpoint, always put this at the back of your mind, that if you sell pinpoint at a break of structure, there will always potentially be what? A 61-point retracement. This means that what if you are selling pinpoint at the break of structure, there's a probability you might hold loss for some time. Okay, if you are confident with that, if you are comfortable with that, then it's okay, because you can see price went to the 61.8 but eventually came back. But you are fine if you are selling and your stop loss is at the high here. Okay, so that is entry variation 1. Sell, put your stop loss at the high. Okay, but instead of doing that, we now as smart traders decided that what? Okay, let's buy the retracement to 61.8. We went down to like 1 hour, the 30 minutes, and we looked for what? A break of the bearish structure. Then bought to 61.8. Okay, so we brought our Fibonacci from the high to the low. Okay, and we saw that what? And we saw that what? Okay, this was the 61.8 around here. Okay, so prices came to the 61.8. Like I always say, 61.8 is a zone. So don't worry about prices trading above 61.8. So far it's a retracing market. There's a high probability that what at the end of the day it will still correct, except it wants to go ahead to break the entire structure, but it will still correct itself back into 61.8. Okay, so in this case, we saw what? A break of structure. When we saw the break of structure, we saw prices go for a natural 61-point retracement. Okay, so we decided that what? We decided to buy the retracement when we went to small time frames to look for what? The break of this bearish structure. We decided to buy the retracement to 61.8. Okay, so when we bought the retracement to 61.8, we now decided that what? Okay, at 61.8 is an opportunity to use our second entry variation and third entry variation, which is what? 1, sell pinpoint at 61.8 with your stop loss at the high and sell to the ground level right here. Okay, we calculated this to give us about a 1:3 risk reward. Okay, so the third entry variation is what? Read the structures that took prices to 61.8. Read the structure that took prices to 61 and sell at the break of the structure to the ground level here. Okay, so for entry variation 2, like we said, this is our entry, push exhaustion, push clear break of structure at this point, 61.8, sell pinpoint, put your stop loss at the high. You will still be soaking in profits right now if you entered using what? Entry variation 2. Now for entry variation 3, let's go ahead, let's go down to the 1 hour time frame this time around to look for what? A break of the structure. Okay, so this were the bullish structure that took price to 61.8. So we saw price make what? Push exhaustion, push exhaustion, overall push exhaustion, push exhaustion. This was the last higher low. Then we saw prices make push break of structure, entry variation 3. This is an opportunity to sell, put your stop loss at the high, then just leave prices to go down to the ground level. Okay, if you miss that entry, this is an opportunity because price is currently trading around the entry variation 3 entry with your stop loss at this high, then just set and forget, you know. Hopefully, I believe price will hit take profit this week. We've had very slow run on GBPUSD. Okay, but we've had very slow run because, you know, market has been, you know, kind of, there's not been a very impulsive movement. Okay, but like I always say, it's kind of beyond our control because what we have in our control is our trading system. Okay, that is what we can control. I can control our trading system, okay, and I can control my approach to the trading system, but I have no control over how fast the market moves. Okay, so clearly there's been a break of structure here. Put your stop loss at the high and sell prices to the ground level. Okay, so this means that what if we're selling at the break of structure with our stop loss at the high, this will be about 91 pips. Okay, so with a 91 pips stop loss, we'll be selling to this point for about 196 pips. This will be like about a 1:2 risk reward. Okay, so these are the 3 different variations of entry that you can pick on this particular trade. Sell now, you know, since prices came back around the entry point if you are not in this trade, but this was the particular entry. Stop loss here at around 90 pips. take profit here at around 196 pips for a 1:2 risk reward, or at our 61.8 pinpoint entry at this point with 73 pips stop loss with what TP at 243 pips. This is a 1:3 risk reward. So these are our various ways of entering this particular trade and taking advantage of this opportunity. Okay,